How's it going, guys? It's your boy Mike from Seattle, and I'm back again with my CPA, my tax pro, Evan Kirkpatrick. Evan, go ahead and say hey.
Hey, guys.
So for those of you who are watching, if you've seen the other videos with Evan and you like what he has to say, the link to his website will be down in the description below. I highly recommend it. My mentor uses him. Another investor out of my real estate group uses him. I use him. We've all had great experiences. He does a great job. And what we're going to talk about right now specifically is my tax returns. So Evan, this was the first time that you and I worked together for year 2020, and I'm absolutely planning to work with you again for year 2021. But what I wanted to ask you was, specifically in my case, what were some of the tax loopholes that we took advantage of for me? You don't have to give specific numbers, but what were the tax advantages that you used for me in my real estate?
Well, step one, and this just is going to sound really stupid, but one of the big things that happens is people just don't necessarily deduct everything. You know, if you could spend money on, or if you spent money related to real estate, which can either be things related to a specific property, which most people are more cognizant of, or things related to rental real estate in general. Once you own a rental already, you can spend money on things like continuing education and things like that. And those are spent in order to facilitate the production of income.
Interesting.
And those are all deductible as well. And so step one is just deduct everything. Part of that is being organized.
Right.
You know, having something, and this is something I've been sloppy about at points in my professional past, and have definitely has become a point of emphasis for me in the last year or so, is it is incumbent upon someone that is a property owner, a landlord, to be sufficiently organized to provide, the income and expenses for those properties without us, trying to wade through the proverbial, garbage bag full of receipts.
Right.
Because we're just not going to do that. It's not a good use of our time. It's not a good use of your money. You know what's going on as a property owner. You need to put together something resembling an income statement for each property each year.
Yeah, so I mean, that's kind of one of the things that I've been working on more this year, is tracking any type of related expense I can. But what I hadn't thought of was your continuing education. So even like, I have a lot of real estate books back here. I mean, you're saying I spent $15 on one of Michael Zuber's books, and that's a write-off because it's continuing education? Or
I mean, it's related to, how do I make money on this rental? I own a rental. How do I make money on this rental? Well, I bought this book. Okay. Like, the term is ordinary and necessary. Like, would a reasonable person do this in your circumstance? Well, yeah, like, I'm trying to make money on rentals.
Okay, that's good to know. Yeah, because I mean, I don't buy a lot of courses or a ton of books, but I do spend some money on it. Another thing that I just recently did, so I live in Seattle, Washington. All my rental properties are in Gary, Indiana, or in Northwest Indiana. So for the first time ever, I have owned them for a year and a half, never seen them, never visited them, nothing. I just took a trip out to Chicago. I flew out there. I had to stay in a hotel for a little while. I had to drive around to get a rental car to view the properties, meet with real estate agents, meet with the property managers. I assume within that, the management of my properties, and I also toured a house that I put an offer on and I'm hoping to close on. I assume there's a whole bunch of different expenses in there that I can also write off.
Yeah, we're going to be deducting those travel costs. Yeah. And actually for 2020, it's normally where you can only deduct half of your meal cost. But for 2022 or 2021 and 2022, I believe, as a helper to the restaurant industry, you can actually deduct 100% of your bill costs for the next 2 years.
I remember reading that article, actually. That's interesting you bring that up. Well, that's super cool. Yeah, I saved all the receipts. I got it. I was like, I got a folder on my phone, take a picture of it, keep it in my phone, put it on my little spreadsheet. I'll send it to you. I'm doing my homework, I promise. Okay, so one of the tax advantages that you took advantage of me was just not being dumb, being organized, and the fact that I need to actually do my best to figure out all of my expenses that I put into real estate.
It's crazy how much of our job is helping people do that. But I mean, that's really like battles 1 through 3 a lot of the time.
Okay, so then other than that, what about depreciation? Did we take advantage of that?
Yeah, I mean, and so a lot of depreciation is, you have to do it right in the year in which you buy the property. If there's some minor issues or something like that, and it's like the next year, sometimes we kind of just fix them. But if you get like 5 years down the road and you busted something with your depreciation, you have to file an entire extra form, a complicated form, to change your accounting method. related to your depreciation to fix things. We've actually had a number of circumstances with people that either used low-grade providers or doing self-prep before, where we've done that and have recaptured large amounts of depreciation deductions that weren't taken. But in the year where you buy the property, that's the most important year from a depreciation perspective, because that's where we're figuring out how much we're allocating to the house, how much we're allocating to the land. Another thing it's not technically depreciation, it's amortization, but another thing you can deduct over time is the costs necessary to acquire a loan. And so, most people buy houses on mortgages.
Right.
Well, okay, it could take $2,000, $3,000, $4,000, $5,000 to get that loan, and via their mostly bank fees of different kinds. Well, you could deduct those loan costs equally over the course of the lifetime of the loan.
Okay.
The nice thing with loan costs too is that if you refinance the loan, you wipe the first loan out of existence. At that point in time, you can deduct all your unamortized loan costs. You don't have to wait until the property is over.
So, for instance, I closed on a refinance on my primary residence this year. So that's something we'll probably take advantage of.
Well, primary is different because it's not a rental.
I live in a duplex and I rent out half of it.
You're right. Yeah. So on the non-house hack half, yes, we would take that.
So once again, just for people who are watching this and who don't know Evan, he mentioned casually low-grade providers, a subtle jab at people who probably don't do as good of a job as him. And if he's not going to be extremely braggadocious, I will on his behalf. I used a low-grade provider who was recommended to me, did not have a good experience with that tax person. And when I went to him, I could tell like the quality of the product I was getting was significantly better. And as you just heard him casually reference house hacking, clearly Evan knows about real estate, and he mentioned Bigger Pockets earlier in I think one of our other videos. So he knows real estate really well. Evan, can you explain? There's a lot of people who prepare taxes, and I assume some of them aren't as well versed or just don't spend the time to know and understand how real estate affects taxes versus, I guess, what you offer. Can you tell us a little bit about that?
Yeah, so there's a couple of things to keep in mind. One, here's the general one. You don't actually have to have any sort of professional licensing to prepare tax returns. You don't have to have an education in accounting. You don't have to have ever done it before to prepare tax returns in exchange for money. You just have to get a PTIN, and it's essentially an IRS provider ID, and you can fill out tax returns. What does that mean? It means there's people out there that don't do a very good job with things like tax service and stuff like that. CPA is not the end all be all necessarily. There are people out there that are enrolled agents, which is an IRS credential, that they have relatively similar educational backgrounds to CPAs, but they're more just tax specialists. But Bob down the street that has some tax shop, he doesn't necessarily know anything any more than just your run-of-the-mill bookkeeper does. I've been doing this for my entire life. I've been in public accounting on the tax side ever since before I graduated from college. Your average CPA these days has a master's degree in accounting. We have to have 150 hours of higher education to take the CPA exam these days. My background was that my accounting degrees are from the University of Texas at Austin, home of the 4 and 5 Texas Longhorns. As of the time of this, if you're listening to this in 2022, who knows how many games we've lost now. But I've been doing this my entire professional career. I started out working in a national firm where I was working with high net worth individuals and closely held businesses, some of which were real estate developers. And so, that was a lot of those, they were syndicators in the classic sense and pretty big ones. The biggest deal I worked on in that regard was we had a developer that had a 5,000 acre master plan community that they were the developer on. They were the ones subdividing it, running utilities, running roads, doing all that fun stuff.
Right.
And we had an Excel workbook with 100 tabs in it, one for each platted section of the master plan community, because you have to track that stuff for cost purposes lot by lot.
God, that would suck.
It was complicated. Most high net worth individuals are connected to real estate in some form or fashion. They've got rentals, or they own a bunch of land, or they invest in these sorts of things. Most of them are connected into this. And then we had some smaller owners too. And so when I started this practice for myself, this has always been a point of emphasis for me in terms of, hey, we understand a lot about real estate. It's a very common need for people. So let's make sure that we reach out to that community. And I've made it a point of emphasis for myself to keep educating myself, stay on top of these things. It's been a big deal, especially, pre-COVID. It was just this huge booming, like all these real estate meetups here in Austin. I was talking in front of some real estate meetups, that the bigger pockets world, and it's not just them, and I'm not saying everyone kind of goes through them, but I use them as kind of like one of the big ones out there, and Gary Vee and some of those sorts of guys that talk about this stuff. It's really brought a lot of attention in on this. Millennial generation, I'm in my mid-30s. There's a lot of people that they don't want to work till they're 65 years old. And so these financial independence concepts are out there everywhere. And it points a lot of people to real estate. And so it's just something that I've always wanted to be aware of and try to make sure that we're not just understanding from a tax perspective, but from a business perspective. Because you can recommend all sorts of stuff for tax purposes that just doesn't make sense in reality. Right. And we never want to do that. We want to make sure that the tax advice we give is grounded in an understanding of this is what your real world objectives are. And we want to save you money to facilitate those objectives. We don't want to save money and then undermine them.
Yeah. So so there was a lot there. The important things that I'm hearing, the important things that I'm hearing are that Evan understands the financial independence retire early movement. He understands it from how he would recommend you go about filing your taxes and preparing. He understands real estate really well, and apparently has even attended many different real estate meetups. Evan, do you own any real estate yourself, like other than your primary home?
No. And you know why? Because I spend my time figuring this stuff out. What I can't help you with is I can't go into a house and look at some pictures and be like, oh, this is what it's going to take to rehab this sucker. This is that. I'm not the expert on, okay, this is the Burr property and this isn't. Right. I can understand it if you give me a spreadsheet full of stuff. But actual, go get my hands dirty, what's that? And a lot of people don't do that, but you have to understand some stuff. And that's just not my area of expertise. My other skills are too valuable.
Yeah. Well, it's all good. I was in construction for 6 years before I became a cop. And so I built some skills in that arena myself, luckily. But
I like to talk about with real estate. It's really important to know what you're good at in the whole process. Some people I know how to pick out a rehab. There's some people that are really good at like raising money. There's some people that are really good at picking contractors and forming teams. You have to know what your skills are.
Yeah. And I think what I'm really good at is letting my mentor, Mark, try everything first and try all of his providers first. And then I copy and paste his success into my life. And that's how I found you. And I'm immensely grateful for it.
Great artist steal, man.
Exactly. Yeah. So guys, hopefully this has been beneficial. Evan, again, how can people get a hold of you?
You can find our website at Kirkpatrick, KIRKPATRICK, PLLC.com. Or you can always call our office at 512-246-9669.
Perfect. And I will have the link for his website in the description below. Evan, I appreciate you coming on the channel. Thank you so much. And good luck to us for tax year 2021. I'll see you around, buddy.
Thanks a lot.